Wait, before you think this is just another price chart, look deeper. Hi. In today's video, I'm going to talk about Shiba Inu and give my opinion on where this is heading to and share my perspective with you. So bear with me till end of this video. Well, what we are really uncovering here is the hidden structure shaping Shiba Inu beneath the surface. This is not noise, it is architecture. Three forces are driving everything: controlled distribution, structural resets, and a critical decision phase forming right now. Visually, that fractured sphere tells a powerful story: division without collapse. Even with internal pressure, the ecosystem holds together. With market capitalization sitting between $3.6 and $4.1 billion, stability is not accidental. From where I stand, this level of structural resilience is surprisingly strong for a meme-origin asset. Here is where things get interesting, because what looks like weakness is actually rotation. Capital is not running away. It is repositioning. Price is hovering around 58 to 60 microdollars, keeping valuation within that same $3.6 to $4.1 billion band. Daily volume between $75 and $107 million confirms attention has not disappeared. But zoom out slightly and you notice lower highs forming. That signals controlled distribution, not panic. And that distinction matters. From my perspective, this feels like smart money quietly stepping aside rather than emotional selling taking over. Now, this is the shift most people miss, and it changes everything. A 44% structural reset has already happened. From the peak near $0.00001009, the market compressed into a flatter, controlled range. This is not chaos. It is recalibration. Falling wallet activity, reduced short-term holders, and softer demand all align here. When both price and participation decline together, that is a deeper cycle transition. The volatility squeeze you are seeing is intentional. In my view, this kind of compression often precedes a much larger directional move later on. Right now, price is boxed in, and this is where tension builds. Sitting around 58, Shiba Inu is trapped between resistance at 61 to 63 and support at 50 to 56. That is a tight corridor. You might notice small 6 to 7% jumps, but those are reactions, not trends. Neither side has control yet. Buyers are not strong enough to break upward, and sellers are not aggressive enough to push lower. This is pure indecision. Honestly, this kind of standoff usually means one thing: a bigger move is quietly loading behind the scenes. Let me stop you right here, because momentum is telling a very clear story. The relative strength index is sitting around 51.5, which is completely neutral. No dominance from either side. Then you look at moving averages: 8 sell signals versus 4 buy signals. Slight bearish pressure, but nothing decisive. This is not a trending market. It is a waiting one. Everything points to a decision zone forming. And these zones matter because they define what comes next. If you ask me, this is the calm before a directional commitment, not the end of the story. This is where the system reset itself, and it was aggressive. Within just 24 hours, 59 billion tokens were liquidated. That is not small. That is a full-scale leverage flush. First, forced selling pushed prices down quickly. Then leverage across the network got wiped out. Finally, price stabilized near 58 microdollars. What you're seeing now is a cleaner structure, stripped of excess risk. Short-term pain created mid-term clarity. From my standpoint, these resets are actually healthy. They remove instability and prepare the market for more sustainable movement. Now we are stepping into a high-stakes setup, and this one really matters. There are roughly 80 trillion tokens sitting on exchanges. That is massive overhead supply. If support breaks, that supply could trigger a drop of around 43%. But here is the flip side. Tokens leaving exchanges reduce selling pressure. If that continues, we could see a move toward 83 microdollars, roughly a 46% upside. This is a true binary structure. Personally, I see this as a tipping point scenario where one shift in behavior could define the next major trend. Here is the paradox. Volume is strong, but price is weak. Daily trading activity between $90 and $107 million confirms heavy participation. That usually signals strength, right? Not this time. When high volume pairs with falling or stagnant price, it often means distribution. Large players may be exiting positions while smaller participants absorb liquidity. That raises a critical question. Who is actually buying here? Because the answer defines what happens next. From my angle, this feels less like accumulation and more like strategic unloading at scale. Now, if you're seeing the bigger picture here, go ahead and hit that like button and subscribe because we're just getting started. Now, let's zoom out because the bigger picture is applying pressure. External forces are not helping. Federal Reserve policy is keeping investors cautious. Bitcoin is struggling below key levels, dragging sentiment down with it. And globally, risk appetite is shrinking. All of that feeds directly into assets like Shiba INU. Meme-driven ecosystems depend heavily on liquidity cycles. When liquidity tightens, they feel it first. That is exactly what we are seeing now. In my assessment, this is not an isolated issue. It is macro pressure shaping micro behavior. This contrast is honestly striking. On one side, the ecosystem is evolving. Sherbarium is expanding, Layer 3 developments are in motion, and utility is growing. That is real progress. But on the other side, price continues to slide. The market is not rewarding fundamentals right now. It is ignoring them. That disconnect is powerful because it tells you sentiment is overriding development. Long-term growth is happening, but short-term pricing does not care. From where I stand, this gap creates opportunity, but only for those willing to wait through uncertainty. Let's be real, this is not a collapse, but it is not a recovery either. The market is stuck in a low-conviction phase. Developer activity is not strong enough, and adoption signals are weakening. On the technical side, the downtrend is still intact, defined by consistent lower highs. There is no confirmed reversal yet. That matters, because until structure changes, momentum stays limited. In my view, this is a holding pattern, not failure, but definitely not strength either. Quick note, this is not financial advice. I am just sharing my perspective. Make sure you do your own research and make decisions that fit your own situation. Well, here is the expectation, and it is not exciting, but it is important. The market is projecting controlled movement. That means no explosive breakout in the near term. Instead, price is likely to stay between 58 and 63, with a modest upside of around 4 to 6%. Even in a best-case scenario, the ceiling sits near 64. This is a stabilization phase. Slow, measured, structured, not hype-driven. From my perspective, this kind of environment builds foundations but tests patience at the same time. Everything now comes down to one moment, because the next move will not be random. Sitting around 58 microdollars, this is the pivot. Break above resistance, and we enter expansion. Drop below support, and the trend accelerates downward. There are only two paths here. That is what makes this phase so critical. It is no longer about speculation. It is about confirmation. The market is waiting for a trigger, and once it happens, direction becomes clear. If you ask me, this is where disciplined positioning matters more than chasing momentum.